Hey everybody, welcome back. Happy Friday to all of you. It's nice to be here with you. Mike Fairbourn here for our ThinkScripting class. Looking forward to our discussion today, folks. There was a new indicator added to thinkorswim. I wanted to address that today and add to it some bells and whistles that might make it of even more interest based upon what it does. And so I've added a couple of different extensions to it, I could say, to that script. And I'll look forward to going through that with you today. Joining the chat, my good friend Cameron May. Welcome to each of you, and we do enjoy your questions, comments into the chat. If you are, if you do have any questions, definitely throw those in. We'll try to address those for you as we get into this. And by the way, there are a couple of additional items I want to talk about, some new additions to thinkorswim as well. So I'll look forward to diving into that with you. That's enough said there. Let's dive into our disclosures to get going here. Okay, as it states here, Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only. Backtesting results presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results. Now, investing involves risk, including the loss of principal. Important point to note as well, past performances, we do look at a lot of times performance on the charts historically here. It does not guarantee future results or success. So having said that, let's go ahead and dive on back into our regular discussion here and taking a look at the markets here, trading up towards that upper channel line. I was just wondering how long we might stay at that line. We've been there for about 3 days, kind of slowing down a little bit, bouncing through here. Be interesting to see. I originally got this line through another indicator that many of you might have used. I talked about it earlier this week, but you might not have seen it. Linear regression 50% will give you the main line. See, I'm close to it. I'm not exactly there. I kind of just chose prices to help us out with it. Actual price data, price action itself. But as you can see, we are up to that level. And who knows if we'll revert back down to the mean. We've certainly touched off here a few times, have we not, folks, off that upper level. By the way, when I say reversion back to the mean, anytime we're talking about the linear regression, you're talking about standard deviation moves above and below the mean, STD for short, up top, standard deviation, that is. And we've got another one down here, standard, that's even better. I spelled it out. There you go, deviation below. Okay, so if you're up high, reversion to the mean right there. Down below, sometimes you bounce off and hit here. Sometimes you just stay in the middle. We happen to be at that level right now, which is interesting for our markets because, hey, we're at highs right now. Well, okay, that was a real brief review. Didn't want to go into too many more details on this. But it's interesting when you don't have resistance at new highs, some of the ways you can look to try to find that. All right, folks, I don't know if you knew this, but there is an addition that we have to the watch list. It's a watch list column. Of course, we could use a column up here in our market watch tab. Ooh, not there. That's the calendar. But right over here, we have different custom columns, etc. I was asked in a class earlier today, and actually earlier in the week, too, about these custom columns. So I'm not sure if the individual was able to attend here or not. Wow, Russell 2000. We're not going to get... we've already met our custom expression, I should say limit there. Let's go ahead and just use like the S&P 100 to pull that up. But yeah, if you haven't seen this, if you are new, we do have these custom columns in color that will give you positives or negatives based upon what's happening on the week, the month, whatever you want to do. I'm just going to show you how to change this. I'm going to go ahead and share the week, but I wanted to do this. If you go down here and just click on edit the formula, what you can do with this formula is just change the time frame that you're observing. In fact, it's just this close going back in time right there. Let's see, I'll highlight it. That's 5 days back, and this is a true 5 days back. So the last 5 days, that represents our week. I'll share this right now. Remember, the scripts aren't guaranteed for timeliness or accuracy. They're not a recommendation of any sort. They're relying on the data coming in through the platform to make sure this formula spits out. We've got good data coming through. Just wanted to highlight that. But as you can see over here, changing that number can give us an alteration. This is looking back at 100. Oh, okay, 100 days back in total. Let me just do this one. I'm going to go ahead and didn't know there was a variation in one of those. So let me just add one more in here. You go to customize, And you can come down here and you can see over here's a 3-month, for example. I got a 12 in there, and there you go. Okay, no, I think we're good. Yeah, so here it is. So that is 3 months worth of data. Now, when you put this in here, what are we looking at? It's 65. Basically, it's like, what is it? I think it's like in a month, there's actually like on average, like 21 and a half days or something like that. And so you're just multiplying that by in this case, 3, because we're out to a 3-month. I'll just go ahead and share this one. Feel free to add some additional ones in by changing it to a 5. A 1 month would be like a 21 or a 22. I guess 22 would give us equal, over a 3-month period of time, it would equal 66, right? So we're very, very close to that number right there. But that's what we have there. Let me just share this because I wanted to make sure. I mentioned I would, and I'm going to go ahead and do that right now. So this will be into the chat box, and you'll find this too if you're viewing this after the fact. It'll be in the description section. It'll be listed more under the recorded video itself. So let's go ahead and just put that into the chat so you've got it. And by the way, great to have you all on board. Love to see you all here. Okay, awesome. All right, well, that's that. So now you got an idea on how to change that. And by the way, when you come over here, if you are new and you wanted to adjust this, you can go down into these custom columns, and that's where you can add in the additional. Do I have any left? I do. I've used so many. These are just various ones, but I've only got a couple here. Custom 8, custom 18. You're going to have 1 through, I guess, 20 probably, that you can choose one of these and then change the name to, let's say, a % 1 week. But I've given you 3 months, whatever the case might be. Then you can just simply add the columns in. Now, the script itself should look the same as it comes down through. One of the real benefits of any of these columns, really, which is really, really helpful, is just this right here. Click, click, right? Ascending or descending order. What's getting hurt today? Well, Intel, United Health Group, FedEx, UPS, others, a couple double digits up top, though, and then you got a couple double-digit gainers on the upside. In green, and that is bright green on my eyes right there. I don't know, if I close my eyes and look somewhere else, I'll probably see bright green. That's how bright green it is on my big monitor. You can change those too within the script, and we've had some other classes we've discussed on how to do that, but the colors are right here. There is a dark green that you can use as opposed to green right there. I don't know. It's clear and easy to see. I'm going to keep it there. Okay, that is that. Now, what else has been added fairly new recently to the platform that I want to address too, because I think this can be helpful. And I asked for this. I don't know if, I'm sure my request was put into a big pile of requests on the same thing, for the same thing, but that is over here on the left-hand side. Now, you can put anything here into a watch list. I'm actually going to show it up top. And let me kill a couple of these so we can get this in here. Sorry, let me do that again. We'll go to customize. I'm going to take out, I don't need yield beta to this. Okay, so let's just highlight these. Hold the shift down, highlight them, and I will find my remove right there, and we're good to go. Okay, so what I'm going to do is I'm going to add another column in here. I can keep these on here for now, but it's going to be the extended change column. Very interesting. A great column, really, if you want to see what's moving in the morning, before market, pre-market moves, or after hour market moves. Let's go ahead and highlight this right now. I'm going to just highlight a custom column. Again, we can do the same thing down here on the watch list, which is a great place to have it. I've actually put it down there. You just can't read it, but I'm going to show it in both places right now. It's not EXT. To get to it, it's EXT, but you're going to get some other things. It's right here. What did we get that's new? We got an extended session last price. We got the extended session, you can't read it there, net change and percent change. Now, the percent change is always really, I think, helpful from my perspective because, it makes things more comparable, obviously. If you have a high price stock that's up 10, well, that's a lot different from a stock, in the 50s that's up 10. A huge difference, right, percentage-wise. And so I love that. I love them all, but I do like the last and the percent. I think that can give us a lot of great information. Let's go ahead and add those on right now as columns, and I'll move them up top so we can see them up here too. So we'll do that up top. I'm just dropping them right there, and let's put those in, and there you have it. So that's the last price, and you'll notice over here that these extended columns, they haven't loaded up yet, I don't think. It might be my demo account. I was able to get these to all load up pre-market. Now, they might have fallen off because what have we been doing? We've been moving past the pre-market, right? Now we're getting into the after hours market where this would make more sense. But you'll notice, even though the stock price is changing, the change over here is occurring, you know what? The extended hours change does not change at all. In fact, I've got some here that I've looked at for the last 2-3 hours just to verify it, that extended change did not move yet. So after the market opens, it will hold the pre-market move. This is all pre-market, right? Now, I haven't had the chance to check it. We'll be able to check it today. All of us can, after the closing bell, about an hour, well, 50 minutes or so. We could check and see if these numbers do change, but very, very helpful for, earnings and stuff. But it does hold the pre-market. It looks like it falls off and it says not any, although there was a lot of pre-market data as I looked at it earlier. It's falling off in favor of the post-market or after-hours market. Can be really helpful for over here. Let's just pull this up as we're in the Market Watch tab still. We can go into our calendar right there. And in the calendar, as you'll see, earnings. Earnings are a great way to see what's moving early, pre-market. We click on Thursday. We didn't have any today, but look what we had pre-market. We had, there we go, before market. You can see that. You wouldn't necessarily need that. What else could move stocks pre-market? Folks, something like a lovers and losers or upgrades and downgrades, things along those lines that you'll find over here. Let's go back to it. Yeah, I think we just have a column. Well, we have another column on that, I'm pretty sure, which is actually, you know what? I know it's over here for sure. Let's minimize this. And it's right down below lovers and losers. There you go. Analyst upgrades, downgrades. You've got the post-market movers, etc. But the thing about this is, if I said pre-market movers, do you recognize any of these stocks? You recognize some, but it's got a wide variety of stocks in there that we might not necessarily be looking for. The beauty of the new edition is that I've highlighted it to maybe some of the more liquid stocks or those that have been out there for a while, maybe a little bit more quote unquote established because they've had periods of profitability. They've met the criteria to be on the S&P 100 or the 500. I've isolated it to that group. If you go down that list of the pre-market movers, there's just a lot of penny stocks in there. And I was not able, this is what, I was going to be fine not requesting this. But I did go, I think, to the top of the group within thinkorswim to request this, but you couldn't scan it out in the scan tab either. You can't scan for the lovers and losers and then have it adjust for the S&P 500. So you had lovers and losers for everything, but now with the extended, you got what you want. So you see the benefit there? It's a nice benefit. By the way, there's the last price in there. These have not changed, and they won't change probably until post-market. But a nice little addition nonetheless. So keep that in mind. I think after hours clicking on it, really, really helpful. And by the way, one thing you'll note that we didn't have before this too is after hours, like with a stock, some stocks. In fact, I sent this tweet out today just on stocks, and you can take a look at it here if you want. But these are just stocks that are just moving post earnings yesterday, right? A lot of them were strong, and there were only like 2 that were kind of mild, but these were really quite strong, this group. I'll just throw this in the chat if you want to take a look at that. Feel free to follow Cam and I on X as well. Cameron May CS, Mike Fairbourn CS as well. Oh, thank you, Wiley. There is a survey in the chat, folks. Real quick, if you're able to do that, you don't have to actually do the survey right now. You can click on it, but I would really appreciate it. There's only 2 questions there. If there's something you find interesting or like whatever the case is, so quick and easy to do, but really do appreciate your feedback. That goes to my manager, and I promise you I will read through all of your topic requests, just like, we kind of hit one today as well. So keep all that in mind, but that can be really helpful, just jumping back to our discussion here, on the breakouts themselves, previously, if I was looking like at Lulu that had a big move yesterday, post-market, all I could see is this up here. It would show me the bid and ask would change. This holds the daily price but this shows pre-market and after hours market. But where are my percentages? Where are my net changes just in dollars? They're nowhere to be found until now. Now we can pull up the NASDAQ 100, for example. We can have that on the left-hand side, which I think is a great way to do it, actually. I'll show you this, just the last thing, and we'll move on. But I'm just saying, there's just so much you can get out of this, actually. Let's do this right now. Let's go to it. Just extended. There it is. Extended. It's just the percent change, if nothing else. Put it up top here, right after the last price. This is the last price of the closing. But now you have it on the what? NASDAQ 100. Lulu was in the 100, right? Pretty sure of that. And there you go. Now you can go in and just click up, click down. Remember, that's pre-market right there. But after 2, you should start to see these fill in with the post-market after hours. So awesome tool. Get your percentages right there instead of having to look in this little box and having no other way to scan for it. So quite a few things there, right? That does for us that it didn't do before. Just that one little column. All right. Now, let's continue. There was also, as I mentioned too, another well, let's see. There's an indicator that was added that I want to go into right now and talk about it. And this is something really kind of cool and unique. I'm going to take off our linear regression for now, so our charts go back to normal. But let's do this. I'm going to go ahead and pull up a regular stochastic indicator. And I'll tell you where I think the stochastic has its value. And I want to kind of explain that as we kind of present like the new indicator that had been put into our list. Okay, so on Lulu, if I'm going to go ahead and go to a stochastic oscillator, you can see there are a few of these in here. Now there's a fast, there's a slow. It looks at prices over time. I'm going to go ahead and just go with the fast stochastic, which I think is frequently used. There are some defaults that come along with it. There it is. And we'll go ahead and click on that right now. That's Lulu over a period of time. Now, the one thing you can note, in fact, let's see one that's maybe been a little bit more cyclical, hint, hint. More cycles associated with it. And what I mean is highs and lows. Now, Cam would know the coach I'm referring to, Cam, when I talk about cycles. But I've always thought that the prior coach, he's not with us anymore, but a lot of discussion on cycles there. But I think the stochastic can be really quite helpful and interesting in terms of what is going on with it in terms of the cycle. Now, because what it can tend to do is there might be just periods of time, highs and lows. What's the cycle generally of a stock? And you can kind of see that although there's, definitely some moves here and there, but some could say, as I'm looking over here, and I could say, well, that's a cycle range. That's a cycle range. Whoa, they're kind of similar here. They're similar length. The stochastic could do a really good job of helping spot those lows. I'll say this, it can do a fair job. This other indicator can do a much better job, and I'll explain why, because it looks at price data. Okay? And so let's go ahead and compare that one right now. It's funny, though, anytime I bring up cycles, I always think of this coach that we used to have that really got into cycles quite a bit. I really bought into it. It's fascinating what you can see. Some stocks have different cycles, but here's the other one. The Stochastic Distance Oscillator. And you say, wow, okay, that's interesting. Well, what is it exactly that is going on here? Let's do a quick comparison below the two. First of all, what are some key things we note here? I'm going to make it big. If you don't make it big and you don't see your indicators, I always say, what is the point? What's the point? If you can't see it, it's really not there, and it doesn't matter. Look at this low. Okay, I'm going to just those same cycles that I drew. First of all, we're dealing with one line. Interesting, one line, easier to see. Okay, see the points in here? You got different levels. Now look at this. This didn't move up as much, but it was a cycle point. Could we have potentially put 2 and 2 together and said, well, trend is down here? Okay, and trend's been down for a while, so perhaps it's a bull flag type of a scenario, possibly, right? But the bottom line is it could represent areas of bottoming or topping, and that's what you get with this indicator. But not just that, the lows on the chart too. So I kind of would say this. I'm going to have to reach out to that old friend of ours and just say, hey, there might be something, that you might find of interest in terms of a cycle, because I think it does a fairly good job of helping to identify a different cycle that some of these stocks do have. They just have different cycles. And you could say, okay, so let's just take it one step further and say, here are the cycles. Now, what do we say about oversold, OS, and overbought? Because we are getting that on here. I'm going to explain the indicator here in just a second. But remember this, if you go above oversold, if that's telling us that this could be a cyclical low, and now we're saying it's breaking above this level, do you see what it's doing? It's merging a couple of things together, actually. It's saying this distance oscillator represents momentum in terms of what are the changes of price, and then it pops on a stochastic on top of it. Just the stochastic math to help us identify these cycles is what's ultimately going on there. And so having said that, let's go ahead and pull up the indicator itself, and I'm going to show this to you so you can first of all kind of see, there it is right there. So this is, and let's just go, let's read about it first, because you can always read about it. Stochastic, where are you? Right over here. Yeah. Just click on the question mark right there. I'm going to read through this right now. Stochastic oscillator is a technical indicator designed to evaluate an instrument's current price position relative to its maximum and minimum ranges. The ranges are important when we're talking about cycles. If you're trying to find peaks and valleys, right, and trying to identify that and get more indications of it, well, that's what this is designed to do. Its calculation is similar to that of the stochastic oscillator. However, it uses momentum to determine relative price strength, and direction. Now, moving on and explaining specifically some of the details that are going on here, all it does is it borrows stochastic information up top, stochastic information, but then we have a nice little addition here, momentum. Okay. Now, let me get this, because I did read through a couple of more details and I want to make sure I get this right. So it calculates the absolute price movement, the distance, applying stochastic calculation over that range. It smooths this value within a moving average, highlighting overbought and oversold. Okay, so you all have that. You can add that now. I think it's a really interesting one, and I've noticed that thinkorswim really is careful about the group themselves. The tech guys. They don't add in stocks that might just present very little value or might be very relatively similar to another one out there. They're trying to combine indicators. We combined one a while ago in a class here that we had. That was momentum. It combined momentum using RSI with the money flow as well. That was a custom indicator that, I spent a little time on that one, maybe a long time. Momentum, where are you? There we go. Momentum money flow. You remember this? And I still use this. I think it's interesting because this combines the RSI and the money flow, and it looks for prices to hold above the upper level of RSI as opposed to being an oversold area. It shows more strength, kind of like a MACD, kind of like a stochastic, but completely different, made up of two separate indicators. Okay, that is in I don't know if we'll have time to show that, but that is in the YouTube. That's a class we did about 4 weeks, maybe 5 weeks ago or something, a little over a month ago. Anyways, I'll try to pull that up if I can. I should have had that ready, but I didn't. My head was buried into these calculations. Okay, so let's do this. I am going to, you know what? Let me just do it real quick. So I brought it up a few times, and we'll go through it. There we go. Is it that one? It's a little bit longer than I thought. Okay. Oh, there it is. Yeah. Okay. So I'll just plug the link in if you want to check it out. But this is a kind of a second one we've done already. I'll put it in the chat if you are in fact interested. You can check it out there. Okay. It started to play in my ear. I don't like that. That just confuses me further. Okay, and here is, in fact, just a playlist for the class while I'm at it. Playlist, and that will just let you look at a few of them that we've discussed. But that was one we talked about. Let's take it off right now. We're back to our stochastic distance oscillator. Okay, so in looking at that, you can see how it can help us find those cycles. But, the one thing about this is, and I'm going to go ahead and just take this off for now, the regular stochastic. You have a general sense of how that moves. This is kind of custom built around the stock. Now, we have one that I've talked about previously that is kind of, it's sort of specifically for the thinkorswim platform. It was built, that's the market forecast indicator. Market, where are you? Market forecast. Market F should show it. It does. And so this has, those stochastic indications with it as well. And the one that I use over here is not the, you guys have maybe seen me use this on other, in other classes. But what this shows, this is only against the S&P 500. And it shows a similar thing. And I've got to redo this indicator actually, where it has overvalued above 50, undervalued below 30. But this has been used on, let's say, for example, the SPX. As a quick note, right? The SPX showing long-term strength is where we, traders, investors will use this, or just general strength of the market or weakness is what this tries to do. Now, this indicator is actually kind of the market forecast version, is the way I kind of look at it, for an individual stock as opposed to the S&P 500. Okay, there are some differences in here, but there, it's somewhat close, but you'll notice there are variations. We were making a high over here relative to this dip because what it's doing is it's accounting for momentum. This is just simply a longer term stochastic is what it is. The market forecast, which can be fine, I guess, with the market, but we're looking at actually momentum. We want to tie in that momentum aspect, which is unique. So you can kind of sort of look at it that way. It's sort of like the market forecast intermediate term line for individual stocks. I'm going to go back to Tesla right here. Now, the one thing that is really, really helpful when you have these one-liners and they're condensing this information together, quick note, I've got to highlight the formula too. These are just the defaults that are provided with the stochastic in the days it looks back over time, like the high length, the low length over a stretch of time, okay, is what it's doing here. I'm going to change these back over here. I just looked at my y-axis, and folks, I'm all back in percentages. So, and I have a good idea as to why that is, but we'll just go to numbers there, and we're good to go. Okay, so one thing we've just addressed in this class is how could we find, when you find these indicators that are combining two together, kind of a fusion, momentum plus the normal stochastics, momentum, MOM for short, plus stochastics, right? That's what we're looking at here. And it's identifying it specifically, and then it could help us identify possibly the cycle and the low level, the oversold, overbought. What's really fascinating too is when momentum within the possible cycle formula is getting higher highs and higher lows, but the stock is not. In other words, I'm coming back to the topic that we've addressed here in this class that just seems so interesting with this indicator, and that would be something like a divergence overlay. Let me just see if I could spot one here as we take a look at it on Tesla. In fact, I'm going to zoom into this range right over here. There were a lot of highs and lows. Now, we were getting more strength on the upward moves than the downward moves through momentum. Prices were going lower here. Earnings kind of shifted everything, but look over here with me. Lower lows, clearly lower lows on the chart. Tying in everything we talked about, why this could be of use for a trader, possibly, if they want to use it. Look over here with me. Look at the higher lows. Higher low, higher low, higher low. Boom. We took out this high. We didn't take out this high over here, That's two forms of positive divergence, also referred to as bullish divergence here, off that bottom. So you got a first indication. The trend already changed. The trend was up over here, and now it's going higher. We can actually compute this formula. There's a basic way to do this, comparing price action relative to our indicator within a ThinkScript code, and I've built that, and I want to show you that. It's very simple, very straightforward. This is the one I've found to work the best. By the way, before I go into that, let's just pull up a stochastic and look at this exact time frame, because I haven't done that yet. And I just want to see, this is just kind of all on the fly. Yeah, good case in point. Look down here with me. Do you see it? Oh, let's make it big. Got to see it first. Got to see it. Did it pick up on the divergence? It absolutely did. Here is the SDO relative to stochastic. You're basically making at or even new lows down here well below 20. You are actually above 20 here. That is the impact of the momentum. Now, can we devise this into a divergence indicator? I've done that. Let's pull it up right now, and I've done it in this format. I've done it in the scan format, the scan tab. Oop, let's clear these off right now, because we can then scan for it. I'll pull it up too, so you can actually see the code itself. But I'm going to load this in, and it was the stochastic is what I'm looking at over here. Stochastic Distance Oscillator. Okay, this is it right here. Okay, all I did was borrow right from the SDO, this information, all of it. That's all SDO calculation, Stochastic Distance Oscillator, right there, oscillator. This is the simplest way, working on this for, at one point in time, there was a week I was looking at this just trying to find divergence, and this was the simplest and I would say the one that just gets the most hits in terms of trying to identify. Now, this is only looking for bullish divergence. We could create one that looks for bearish divergence, but all we're looking for is an increase while price, I just tried to put this in here, does not make as much. In other words, you're increasing the oscillator itself, whereas this one does not move. This is greater than 0 in terms of a price change, and this is less than or equal to 0 in terms of a change. Okay, it's a short-term change, but let's go ahead and scan it right now. We'll go S&P 100. Perfect. It's all set and ready to go. Let's scan it. There are right now 15 that are showing up. Let's pull up some of these here and look at them, and so we can identify what they might be showing us. Medtronic, right in the middle. All down on the week, aren't they? Everything's red over there. Well, let's see. One's loading up still, but looks like it. Okay. That's our 1 week column in our scan tab. Again, folks, we are in scan tab, but key point, we're in the Stock Hacker to do this. Stock Hacker, great tool, but just so you know, there are a number of other, sub-tabs we could click on. You got to be in the Stock Hacker to do it. Let's take a look at it right now, see what we've got. Medtronic MDT. I don't need the stochastic. Let's just take that off for now. Where are you? Right there. Okay, cool. Let's kill it. Click OK, and MDT. Okay, this is what we're looking at over here. It's short-term in nature. Okay, you can probably see what it's picked up here for us pretty clearly too, right? Price was coming down in here, but now we're making a new low, and momentum was actually quite strong in this recovery here, as it ties into the possibility of a cycle low, right? That's what we're looking at. Now over here, we're sitting right at support, or very, very near support, prior support here. Look at the stochastic. We've gone down in price, so price clearly down. SDO, we're not down. In fact, if we were down, we would be drawing a line down here, right? At this point, SDO high. I mean, we're almost at the high range over here on the SDO. We're almost there. Actually, at that level, let's just take that off so you can see it a little bit better. There you go. Okay, so we're almost there. So that's a divergence. What else are we identifying on the chart? Well, we already kind of took a look at it. Support. I don't know what's going on with MDT. I do know it's in the S&P 100 that we searched for. There's 15 companies coming up. They're all going to look a little bit different. But hey, time to dive into some other tools. I know you guys are all about Fibonacci, right? Uh, let's grab on the Fibonacci tool, pull it up to our top here. Oh, right around the 50% level. Sometimes on these longer term pullbacks, you come down to the 50, you bounce off it, and some traders will actually take that trade. We don't know if it'll go up or not, but it could hold that. So what they could be looking for, although we do not have it right now, we've got a possibility of a K hold. Not today, probably not today, right? Because we'd have to close above this high. But what would the K hold be? In other words, we take it now down to a possible setup point. We're on the 50. Could we, into next week, because here we are at Friday, could we close above this level? I'm sorry, that's 50% level, but also it's the high of the low day. It close above the high of the low day right there. Okay. Could we do that? Question. Put the question mark there. We don't know if we'll get that or not. Folks, this all started with what? Divergence, a divergence indicator that I need to share right now before I forget. I'll have it again for all of you in the description section if you're viewing it after our class. In the description section under the more, just click on that and I'll have it there for you. But let's get this scan, let's see, shared right now into the chat with that simple. And the reason why I showed you this is I just wanted to state, you can create this code just with that simple divergence scan. Again, that was bullish divergence. There can be a bearish divergence. You have a pretty good idea how to do that, right? You just want to reverse the zeros and the whole setup there in that line so that you're looking for prices themselves to be moving, let's see, the indicator to be moving down, whereas prices aren't moving down as much. That would be kind of like a bearish scenario. Totally flip-flop. I threw out the bullish one here for you, but here is that script right there, folks. Boom, you got it. Okay. Oh, thanks, Chris. Yeah. Good to see you all, by the way. Appreciate the points listed there. By the way, again, yeah, there is that survey link in the chat for those of you who just joined us. Click on that if you get a chance. If if you're able to fill out just 2 quick questions, really appreciate it if you are, if there's something you like, whatever the case might be. And also while you're at it, bottom right-hand corner of the screen, click on that subscribe button. Love to have you on as a subscriber. We've got over 125, yeah, it's like 128,000 plus. More than that, actually, already subscribed. And if you like today's presentation, smash that like button. Would really appreciate it. All right. Now, let's continue. We've got a little bit more in here to go through. So that's that. Let's hit one more in here. I have not looked at many of these. I don't even know what Pepsi looks like, but we'll pull up Pepsi right now and go through it again, though. This is the code. I'm going to show you this code again so you can just see, ideas on creating divergence doesn't have to be too in-depth. I tried some really in-depth ones. It didn't work out. Remember with ThinkScript, you always have to make sure what you're doing is kind of tied in. In fact, let's just do this. I'm going to pull this up here just so you guys can see this, but it's tied into, can ThinkScript meet the goal? I've had some pretty long and convoluted ones, and it simply couldn't meet the goal. Maybe I was just being convoluted. It just didn't make any sense. But if you can get some simple ones in there, you can add those to different indicators. I thought this was a cool one that could potentially be used for those divergences, no doubt about it. All right. So with that, let's get back to it. And I was going to highlight too, yeah, over here, of course, this is the scan tab. We can create columns as well. That light up if it's showing divergence. There's just different ways to see what you're after here, just basically on this new indicator, of course. But yeah, there's just a couple of different varieties and different approaches that can be used. Market Watch was clearly one of them, like these columns in here. We could have that in there. By the way, too, I did mention that K hold, which, by the way, on that stock we didn't have yet. But if you do want the K hold script, I think I've got that here too. I've used up a lot of these. Yeah, it's right there. So that's just, remember, this is approaching it from a different angle, but I thought I'd bring it up because, closing above the high to low day, that script is available. There it is right there. We'll pull this over here. And these can be interesting to line up next to different columns, but these would just indicate that we are closing above the high of a low day. I bring that up because what could be done is you could have a column here like we just talked about, although we just have a scan right now, just as a cool way to do this. You could have a column over here that's looking for potential divergence. Again, that was bullish divergence. Divergence over here. And what we'd be doing is comparing that over here to a K-hold and saying, well, these are the ones of the 50 or the whatever. If I did the 500, we'd probably get maybe, I don't know, let's see, several times more than 50, well, maybe more than 15, maybe 50. And then we could see which of those are having K-holds. We could check out those first as well. That's how we can kind of use two columns back to back. I think many of you might have looked at that, but that's something I can work on after we're done with this class. I can create a column and we can go through that as well. But yeah, oh, sorry. Yeah, here I'm talking about, I didn't share it, which was my whole idea, was to share that. That is exactly what that chat box is for. Thank you for that, Gazelle. All right, let's go ahead and share that right now. This is your K-hold, and I'll just type that in here just to make a distinction between the other ones right there. So again, scripts aren't guaranteed for time or accuracy, but they do take the information coming into them. In plain language, can you describe what you mean by divergence? Yes. So what it is on that, and by the way, thank you, Cam. He's already given an excellent answer there, but I'm just going to give you a visual since I'm here. And we'll kind of finish up on that. Divergence is this. You've got an indicator that's diverging from price action itself. So divergence is always relative, at least in terms of how we use it in this class, it's always relative to prices themselves, price action. And so prices, in this case, what are they doing? They're going down. But notice the indicator over here is going what? Look, compare the lows. The best way to do it, compare the lows and highs. See that low right there? How does that low compare to the prior low right there? So kind of in context with what Cam said, and just writing it out, look over here. Do you see this low? This low is not a low. This is a higher low, right? It's almost a high, but it's a higher low than this low. And so what that's telling us is the momentum that is part of this code, this new indicator that was brought out, the momentum is showing strength, showing something internal that we're not picking up on price. The downward move was more mild over the time frame than the upward move. Although the eyes can't see it, the closing price is which is what this indicator looks at, difference in closing prices over a time, and then throws the stochastic calculation on top of it. It's showing that there was strength there. So just be mindful of it. You wouldn't get this with a regular stochastic, right? And now the script is in there to help us identify that. So more than anything today, folks, I wanted to run through this and just highlight for you that portion of the script that can be used interchangeably with a lot of different a lot of different indicators to help you identify divergence. In this case, it was positive divergence, so I hope you found that informative and useful, as well as the other points that we talked about, extended change, extended last price, that can be really useful, especially as we are approaching close of the market. So with that, it has been good to be with you. We're just about at time here, so go ahead and close it up. Folks, I wish you all a great weekend. Thank you for helping the chat, Cam. And again, if you get a chance to fill out that survey, would really appreciate it. And I'll keep an eye out for any topic requests in that survey as well. All right, so with that, folks, have an awesome weekend. See you next time.